Yo, what's up, guys? Yeah, doing a late night stream today. What up, guys? How's it going? I got on the Discord real quick. We're gonna go over a little bit here today. A lot actually. What the fuck, man? What is up? Alfredo, Wesley, DR No, Devin, Shane, how you doing? Guys? Stangster, what up, dude? Massive Zen, what is up? Alright, guys, yeah, we're just gonna kind of go over the charts. We're gonna be looking at the cycle. We're going to be looking at a couple of other charts that are trading against AMC as well to give us a better picture of what's going on. But I just want to, clarify some things first. Obviously, this is not something that, we were expecting, where we weren't expecting us to go all the way down, right, and get to single digits. Like, that was not something that we were tracking. So, things happen in the markets that we can't control. We know that the system is manipulated. We know that the algorithm is it's got an agenda, and we're tracking the points of interest, and around that, so you have your points of interest, and in between there's noise, right? Doesn't matter how the charts behave, there's going to be noise in between. So the important thing to note here is, or something I guess good in the short term, is that we might get a relief bounce here. Okay, so, and this is because of the 62-day cycle. Okay, we haven't been tracking the 62-day cycle here as much as I've been wanting to, just because there are other cycles, right? Like the regression cycle that we have. Okay, which does go hand in hand with the 62-day cycle as well, right? But we have not been updating the cycle as much as I would like to, but we do have right now, we are tracking the cycle identical, as you guys can see. Okay, and this actually reminds me of the not this cycle, but the previous one. So if you guys remember the December cycle back here in the 62-day cycle, you guys remember this pattern right here, right? So we're in the same phase. We're in phase red. Okay, so it's the third phase, and I'm gonna stretch this out a little bit so you guys can see the height. Okay, but here it is, and then here's also the December cycle. I always take the bars pattern so you guys can see exactly what's going on, because with candles are just difficult to track sometimes. Yo. Here we go. Okay, so you guys can see that. You can see the moves are clear. I mean, they're all pretty similar, if you ask me. If you take any other pattern, okay, in the cycle and try and lay it over, right, you're not gonna find something that looks the same, right? Like, that looks completely different. And the cool thing about the 62-day cycle is that, well, it gives you a time frame that repeats itself every 2 months, and you can track previous cycles. You don't have to just track this 62-day cycle, right? You can go back in time and then track this entire cycle, because the points of interest don't necessarily change. Okay, remember, that's where we figure out if things are playing out identical, flipped, mirrored, right? That is the points of interest that we're tracking, right? Like right here, okay? And there's macro points of interest, and there is micro. These are micro, okay, guys? So this is where we actually do take a look at the 30-minute chart, because it is repeating itself, like in the dark pool. It's being highly traded in the dark pool, so there's a lot of manipulation happening towards the end of the cycle right here. And you can see right off the bat that we are tracking it to a T. Okay, so what we got going on is this spike right here, okay, which is for tomorrow. All right, so we're gonna bring this guy over there as well so we can see what's going on. So these are two cycles that are both have very similar setups, okay? And we are currently right here. Okay, you guys remember last time this was noise in the cycle, and they took advantage of this catalyst here. I think it was a GameStop catalyst from what I remember. And this was supposed to happen right here, right in the cycle. That was the point of interest on that date, which that's tomorrow for us. So I did post on Twitter that just based on this, on the current setup, even though we did have a little bit of a rally here after hours, we did come back down. So I am still expecting us to have a relief bounce here around the 930 range, just based off of the cycle again, guys, and the ratio levels. The bounce here would be around 930. Okay, we could still go below that if they really do attack it, but based off of this setup, I would see 930 being that range, and then we would see a full reversal. And the reversal should take us to a rally to 12. I know a bunch of people were complaining about that on Twitter, like, why am I calling it a rally? When I say rally, guys, if you guys are on the stream, you know what a rally is, okay? A rally, it could be fucking 10%, dude, and we're still gonna rally because we fucking rally, okay? We rally with music. That's just, sorry if you took that the wrong way. I didn't mean to, you know, come across like, yo, this is just a rally that's gonna take, I mean, this would be a lot. It would be a what would that be? Like a 30-something% rally? If we went from 930 to 12, yeah, it would be a 30% rally, which, I mean, 30% is a lot, okay? So, and, you know, rallies aren't just going to be run-ups. Rallies are any upward pressure, guys, that is strong is considered a rally, in my opinion. So this is a rally that I'm expecting. Again, we did, for the weekly scenario, guys, it was completely off because, well, we got shorted on earnings. So I am just letting you guys know that when I do make these scenarios, I make them based off of the technical setup, what I believe is likely to happen if things respect certain support trend lines, certain support resistance lines, right? So, you know, I'm not always going to get those right, okay? People make mistakes, and I think that's very fair. I don't think any trader in the world is, you know, knows it all, you know, gets everything right every single time. I think people make mistakes, and that's one of the ones where, you know, I was expecting a bit of upside here on earnings, and we did not get that. We did get shorted down. So just based off of this setup, I do see us having, again, a relief bounce here in the short term because, I mean, guys, this is such a nasty short attack. It's disgusting. And there has to be upside at some point. I know that's just, you know, something we've been expecting here for a little while, but this is, I mean, just with everything going on in the markets, guys, also the crypto just had a nasty fucking dump, And I did also post another video on Twitter talking about, if you guys know, the founder of Cardano kind of like spilled the beans, bro. Like, he went ham talking about market manipulation, and he also believes that hedge funds like Citadel and BlackRock are using crypto to leverage their positions. So they're controlling the price action, right, of crypto, dumping it when it's convenient to leverage their positions on other stocks, okay? On stocks, not other stock, on stocks. So that is what I think we're experiencing right now. We're experiencing a massive crypto dump that will be dumped in the market in the short term, okay? I highly recommend you guys go watch that video if you have not. It's really good. And I would, you know, if you believe that the market is manipulated, I think that guy will give good insight for sure. All right, let me answer some questions here real quick. And then also, yeah, the reason for the post, guys, was, you know, that post where I was talking about the $9.30 level is also because, okay, if we do hit that target, okay, and it comes there, and we get a relief rally, okay, that's an opportunity for, I mean, me personally, I'm looking at, you know, options here, because when volatility kicks in on these dips, okay, volatility starts to increase, those contracts do get more expensive very quickly. So that is just something I'm looking at. I don't really see us going below that level, even if we like got super close to 880 or whatever. I don't think they have the ability to dump this, okay, any more than that. I think this was a stretch. It's still, like, for me, it's hard to believe that we hit single digits today. It's still shocking. But they did it. They fucking did it. And I do believe that crypto, okay, has everything to do with this, guys. I do believe that they used the crypto leverage to be able to dump it here, and they're gonna have to prepare for a big rally here in the short term. You know, once we cross that first level of 12, I'm not necessarily paying attention to this tail end, guys. Remember, on every cycle, once you cross the points of interest, the rest is noise, right? It's considered noise, so anything could happen once you cross that point of interest, okay? What I'm looking at after that $12 level is potentially sideways pressure for a couple of months, and that is until we get the macro point of interest, which would not be until July. And we have talked about that as well. I will be pulling it up here so I can show you guys real quick, but the next point of interest is not going to be until... So, and what I mean by point of interest, guys, is macro point of interest would be for a potential run, a big run, not just a small run where you come back down. Small run where you come back down can potentially happen towards the end of June, okay? There is a point of interest on GameStop on June 17th. I did say I was going to post the cycle tracker stocks. There was going to be a bunch on a folder that I was going to individually post on the website. I'm almost finished with it. I might be able to post that later tonight. Hopefully I'll have it out before the night ends. And that's the goal, though. If not, I'll have it out in the morning for sure. But the GameStop cycle, so we'll bring that guy up. So this is what I'm tracking here for GameStop. So we know that GameStop has its own cycle as well, and typically runs 90 days. Okay, so every 90 days you see and here are the previous patterns that we've used. Okay, they all have a very similar setup. Okay, they come down, they trade sideways in between, and then they have a rally on that basically that 90-day mark. So we've seen this happen every single fucking time, dude. It's just ridiculous how, GameStop cycle is easy as fuck to track. Okay, and I don't think they realize that, like, how easy it is to track. It's mind-blowing. Okay, so the current setup here, okay, and then you also have to align them. When you do align these cycles, guys, you have to make sure that, because there is space in between, okay, and I talk about this for this current cycle that we're in, because it's the one that looks the messiest. But when you're tracking these points of interest, you have to remember that when market cycles merge, there's going to be a large space, okay, that I believe where you get basically most stocks tracking and crypto tracking with each other. So you have the entire market basically taking control of what's happening, right? No cycles really. It's just a breathing period for all the cycles, and that's exactly what happened right here. If you guys remember the AMC video I made with how it tracked crypto, I talked about the days in which basically the cycles started tracking 25 days or 20, I think it was 24 days apart from one another, and then it started to narrow down. It was like 16, then 12, then like 6, and then 0. And 0 was right here, okay? So as you're getting closer in the cycle and you bounce, you stop. You stop for a good amount of time before merging away, okay? When you merge away, the cycle repeats again. So you start at, 0, and then you go to 6, and then 12, and then 16, and then, etc. So that is what I believe. That's how I believe that the cycles trade against each other. I think we're going to see a separation soon, okay? Right now, I think we're starting to see it very slowly, but, this date might be, 0. Right here, we might be at 2. We might be at 6 in the short term, and then it's slowly going to stray away again. Okay, but that is something we were expecting. So I know it's a little confusing. Go watch that video if you're curious. But if we use this logic here, we would get the same thing for GameStop. Okay, it would be that June 21st. I would give it a range here of June 17 to June 23rd. I'd give it a week. Every time on the macro, guys, I would give it about a week for things to actually play out. So what I'm thinking here is that, yes, we will have a relief rally on both GameStop and AMC because they track on very similar cycles. And then we will come back down again for a little bit and just trade sideways until the first point of interest, which would be on GameStop, that can potentially bring the price up here for AMC, but it wouldn't be like drastic in my opinion. I think for that point of interest, it's going to be more drastic for GameStop. For AMC, it's going to look a little bit like this. Okay, so I don't know. Get something like that, and then June comes, we do that, like a little projector, and then comes July, that's where we either get the test, right? We either get a macro projector pattern that looks like this, and then we come back down again, okay? And then right after this, guys, if we do not squeeze on this date, okay? This is not the projector. Then this is going to be the macro projector, and this is going to be the same fucking setup that GameStop did before it ran up. It's going to look the exact same. It's going to start off little by little climbing up to make this macro projector that will take us up at the end of August going into September. Okay, and the only reason I say this is because we have been tracking this, where is it? This guy right here. This is the magnetic parallel channel that I talked about, okay, on a couple of streams ago. And it talks about how these are 120 days in length, okay? It is a parallel channel that we respect every year. So this is a year apart, okay? We come back in the channel. After that, okay, there has been two cases where we have completely gone out of the channel. And here we got out for 240 days. Here we got out for 120 days. Same thing here. We're basically coming out of that channel slowly, okay? And we are starting to possibly do something like this, okay? Where we come out of the channel, we trade sideways down here for a little bit, then we might come back in, okay, do the same thing and set up for a major rip. And that is the point of interest right here, guys. See that? That's September. What happened back here? Rally. What happened right here? Rally. What happens right here? Probably that rally, okay? Now, the reason why end of July is also a point of interest is because it's the midway mark here on this. It's the halfway point on this section here, okay? The halfway mark is also a point of interest because if you guys can see it here, most of these 120-day periods have a rally on that mark. Okay, so right here, It's the midway mark. There's a rally. Midway mark. There's a rally. This one, okay, it's on every midpoint. There's a rally. So here, this is the macro midpoint. You see a rally. Here's a rally right here, and then on, well, obviously this one doesn't have necessarily a rally in the middle. You might consider maybe this right here a rally, but then a short attack. But you get the point, okay? That is why we're tracking the end of July point of interest first, and that could either again be that projector or the squeeze, and then this would set us up for the next point of interest here in September. But this is what we're going to be tracking, guys, for the next couple of weeks. And I had said, okay, that if this was the case for AMC, that we would find opportunities in the market, and this is why I'm posting that cycle tracker on the website. Because if we could find other cycles that are trading against AMC and find their cycles, and we can make money on that, and we can make money on AMC, and we can make money on other stocks. I mean, the market is not just about, okay, waiting for something to play out. I believe that there's a smart way to do it, and there's a way that will stress you out. And the reality here is that we need to, first of all, we need to just chill. We need to chill. We need to relax. It's gonna be okay, dude. In the end, it's gonna be fine. You gotta play their game, dude. You gotta play their game, because these guys are playing a nasty game, and it's unfair. It's unfair, but you gotta play it, dude. And I'm telling you right now that the cycles that I am tracking, they're all manipulated, or at least I believe that they are using these specific stocks to trade against, the higher leverage positions, right? Which would, in this case, would be GameStop and AMC, okay? On that sector of cycles, but figuring out these smaller, cycles happening, these smaller stocks that are still getting pumped and dumped, that is a way to leverage, not only, it's your positions as well, but in the meantime, leverage your position with that. If you really look at it that way, guys, if things are going to be trading sideways for a bit, at least what I think, then it's okay to be making money somewhere else. That's not an issue. And a lot of you have mentioned that as well. It's like, I think we are all mature enough to understand that we know what the fuck is happening with AMC, okay? We know that these points of interest are basically inevitable. They go one way or another for sure, and we've tracked that here every single time. So, if nothing is going to change, guys, if the agenda is following according to what these fuckers want to do, then we figure it out, we wait, we chill, and then once the time is right, we set up for that, right? Once the time is right, we set up for that. But in the meantime, you make money, man. You make money how you can. All right? Wesley, have I looked at stocks in 2008, 2009 that had negative beta similar to AMC? I have not, dude. And that's actually a really interesting question now that you mentioned that. I did do this, however. I used Google. What was it? On Google you can filter your search. So I filtered my search to 2008, 2009, and I was actually looking up, short squeeze plays, during that time, because I was curious, what the media was pushing out. I was curious what the media was pushing out back in 2008 when that was a thing, and I could not find that much, man. It wasn't a big thing back then. There was a couple, though, and actually... Dude, AMC was on there. in 2008. Pretty sure it's like one of the ones that they were talking about in play. So I don't know. I'm gonna do a little bit more research on that because I found it pretty interesting for sure. But damn, this looks so good too. Like, this chart looks so fucking good. Like, sorry man, I just got carried away. It just kind of like looks like it would make sense, you know? I don't know. We'll do something. We'll set it up for that. But yeah, I'm gonna look into that, man, because I was tracking the I posted something on Twitter about the SPY. I hope I still have it on here. Oh. Yes, I do. Okay, so this that you're about to look at, guys, on the SPY, and this is crazy, but this period back here, this is 2009, okay? This is the same length, okay? I did not change the length. I pulled the height up so you guys can see exactly what's going on. But these are the same time frame, okay? So they're both 100, which chart was that? Was I using this one? Okay. So they're both going to be 512 days apart from each other. Okay, you can see that time frame. And then obviously as you move these, you know, they're gonna change in with the dates rolling over. They do change in time a little bit, so that's fine. Go here on the 3 days so you guys can see exactly what I was looking at. Okay, and dude, look at how similar this pattern right here. For 2 fucking years, basically. Look at how it looks overlaid with the current pattern. Look at that shit. Guys. The fact that you can take just this pattern. I mean, look at that. Look at the fucking ratio, bro, on this shit. Look at the ratio levels on this shit. The fact that you can just pull this pattern from 2009... Bro, you could have been tracking this shit since November of 2020, alright? You could have tracked its every move, and you would have... I mean, dude, what kind of fucking billionaire would you be right now if you were trading the SPY like this? This is crazy to me. Like, I found it earlier today. I was just poking around the chart, curious. And I found this pattern right here, and also following this portion here, it's 512 days, we have this red portion right here. Now, that is back here, and if we were still tracking this identical, which it would be kind of odd if things just stopped tracking or whatever, but if we were still tracking this identical, this does indicate a pullback up in the short term. So it would be super weird to me, you know, to find something like this that is literally has been tracking to a T, you know, for a while. And it would just be so weird to me if things were just not tracking anymore. I mean, guys, look at this shit, dude. What the fuck? It's not the same pattern. I promise you, dude. Look, I'll do this. You guys, there's gonna be some of you in the chat. You're gonna be like, yo, that's not the fucking pattern. Watch this shit. You're gonna have your mind blown real quick. This is on the hour chart, by the way, so just so you guys, this one, I think I took it on the 3 hours, so it's gonna look more, it's not going to be as detailed, but watch this. Same pattern, okay? Same pattern right here. What the fuck? What the fuck, dude? It's just like, I don't know, it's mind-blowing. And then this is what I'm currently tracking now that, you know, things kind of played out here. Well, fuck it. If things are going to continue to play out, then might as well start tracking this one. Because, I mean, this is just, it's ridiculous how similar they look. Now, just... Again, I have mentioned before that I am still bullish on the market. I do believe that this is a correction. It's going to be labeled a correction. Anything that's a recession would be, I think, past 30%. So if we went to like 335, that would be considered a recession. Obviously, anything below that, if we went below 30%, dude, that would suck. That would be bad. But again, I just don't see that right now. I see just a lot of fear in the market, and I think they're using that to, to have this narrative out, like, oh, people are scared. And we, it's just a way to, to like create fear in the markets while still manipulating what the fuck is going on. And that's exactly what I think these hedge funds are doing, man. They're pissed, using crypto and shit now to, be okay in their positions, but I don't think it's gonna work forever. I think they're gonna pay the price sooner or later. But yeah, I do see a rally in the short term. According to this pattern, it's here in the near term. Some of these you can tell they're like a little bit like a couple of days early here in the way that they play out. So this one's a little bit early. If that's the case, then yeah, we would start to see some upside. And the pattern would look pretty decent having a melt up here, just because we are familiar with how the SPY has, or just how the market has melted up before. This is not an uncommon pattern that we've seen on the markets. Okay, so where did I find the ratio that I was looking at? I mean, you can really take this pattern, place it anywhere here, and try and understand these like ratio levels and how they work. I don't know if you guys can see that right here, but ratio level is just basically giving you the top and the bottom where you see those bounces. That's the cool thing about patterns, guys, is that when you do take a bars pattern of a section, you can use that pattern somewhere else to figure out these ratio levels that are playing out. Okay, so you got your top, you got the first bottom here creating this wedge, okay, and then you have your bottom right here, and then it starts to bounce. I bet you, bro, if I take this pattern right here, it would look very similar to this macro thing right here. Okay, now to go here on the 8 hour or something. Okay, you guys see that? So you got the top right here, the middle, and the bottom, and then it starts to go up again, right? So you got, this is what I'm talking about. You get these natural levels. I use this a lot when I'm trying to figure out where the low of a stock is going to go. This is one of the main things I use, because, I mean, dude, why use, trend lines if there's another pattern out there that probably will look similar? Because if cup and handles respect themselves, in history, typically they're going to follow certain fib levels that are used on a universal level. Okay, that's just how patterns work. So this is a cool thing about this shit. But I guess we'll see, man. We'll see here in the short term. But with the current tracking we're doing with AMC, if we are expecting a relief bounce here, that will probably make the market go up with it. Now, let's say that things start to fucking go down like crazy in the next couple of days. Let's say that we come all the way down to like, 480 or 385 or whatever. At that point, I would start to get a little bit skeptical here as to like, yo, are we just like not gonna track this pattern anymore? And I'd be a little bit skeptical about that, and pull back a little bit. You do have to be careful with these levels, guys. The bottom right now is 391. If this does keep pushing below, and we get another like -2% day tomorrow, things might be completely just playing out inverse, and we might actually get a correction here, and that's not going to be pretty. So just keep an eye out for that, because anything can happen in the market, guys. You already know with the current setup that we have, we were not expecting this. I was not expecting this at all, and it fucking happened. So we have to learn from that. I have to learn from that to understand what the fuck is, you know, pulling this pressure up and how this is even, you know, possible here. We have not seen this happen here with AMC at all, guys. On, you know, there has not been one instance where they have shorted the price this low from the highs here before. You know, and I'm talking about this time frame here. This is the nastiest 73% decrease here in price that we've seen in such a short term. 71%, guys, down in how many days? Like 43? Yeah, 44 days basically. They got the price down 71%. That's ridiculous. You're not gonna find that in the charts here. You're not gonna find a worse. Okay, look at this one, 51%, and it happened. Yeah, 56%. This one's 71% in 44 days. Find another one here. Not even this, bro. Not even this one. Look at that, 60% here, and we thought this was bad. This is worse. Holy shit. This is bad. Back here, let's see. I think this one might have been pretty bad as well. Okay, so this one was quick too. This one happened obviously in January, so it's been a little bit. But this one was 80%, okay, that it went down from the highs here of 25. If we take the average, it would have been as well 75% before it started to come back up. And it was quick though. That's the difference here, guys. This one was very quick. It was in and out. 44 days of that pressure just coming down with no balance in between. So it just kind of makes you question things a little bit, and I mean we kind of know the answer here is like we know that the system is manipulating the price action, right? But I think one thing that makes me kind of optimistic about this is that typically from every, you know, if we use the 120-day theory here, and this is where I get the points of interest, guys, that I'm talking about. You guys remember how we got this point of interest here? I was using the 120-day theory, okay? And that's exactly what happened back here, okay? So you first get your short attack, okay? And following that short attack, okay, 120 days later, you get a release in volume, okay? So it's the same thing that we use back here to get this one of these price targets here. Well, not just a price target, but the actual rally on this time, the March 29 scenario. So if we apply the same thing here, I believe that this shorting here is nastier than probably both of these combined, and that's why the next rally, guys, is going to be very, very nasty. Look at that. What date is that, guys? July 28th, or sorry, the point of interest, end of July 29th. Okay, that's the first one. Depending on how the setup goes, right, might be a small release projector pattern setting up for a macro bull run, which essentially would have all of these short attacks combined and released at the same time. And these are, it's the hedging that's being done, guys, in between, but they're combining all of these shorts and locking them away in a box to be later covered, right? But if you can cover some in between, you're still going to get rallies, right? So even if they were to cover some here in between, they still have this box that's overloaded with synthetic shares and synthetic options, right? These are the ones that will not be released until things start leaking out, and that's when the squeeze is going to happen. So in between, you're still going to get covering, and that's why we track these points of interest, right? 120 days. you're still going to get some sort of release right here, but it doesn't have to be the squeeze. I need you guys to understand that, because some people they don't get that, and they think like, oh, that's you were saying that day, point of interest. Yeah, point of interest doesn't mean squeeze though. Point of interest means potentially upside or downside, okay, depending on the setup. Typically, when I am tracking a point of interest, I'm going to be looking for upside, though. All right. So keep that in mind just for the future. Is that when we are tracking these points of interest, guys, it means that there is potential upside rally, okay, that will bring the price up quite a bit, but it does not have to be the squeeze. All right. Okay, let's see. Yeah, no. Okay, answering your BBIG thing. So the thing about BBIG, and I'm gonna pull up the cycle tracker here, because this is what I'm using for making these setups here that I'm gonna be posting on the website soon. Okay. The thing about BBIG, and I told you guys this, guys, from on Monday. I talked about how this was the high that we had, okay? That there was not going to be any more pressure here, that it was unlikely that we were going to get any more pressure to the upside because we hit the target. If I pull back that pattern that we were tracking, where is it? Right here. You guys see that? We literally hit that target. We hit, this thing fucking went, okay? We were tracking BBIG from, oh, fucking shit. Okay, hold up. This thing gets moved every fucking time. Pissing me off. Okay, this is what it looked like, and we did get, obviously the rally here was a little bit early, a couple of days early, but you guys see the same level? We hit the same level, all right, and then it comes back down. That's exactly what we were looking for. This is why I said it was going to be a small rally, nothing crazy. You hit it, you come back down, and now we're trading down here, nothing crazy. I am not looking to enter a position or anything on BBIG just because I do believe it's had multiple rallies in a row, and this reminds me of SOS. It reminds me of these other crypto stocks that, you know, got pumped heavily, and then they shorted them down, you know, to really small levels. So for this current point of interest, you know, there might be some in between sideways pressure that we do get. Okay, but just based off of what I'm looking at and seeing here with that, I do not see a major rally with BBIG. I think it's, again, just like Mullen and Prague and all these other stocks that were brought into the system, and now they're trading at, you know, pennies. I think we might unfortunately see that with BBIG. And that is, again, just because typically, guys, when they use these meme stocks, and I can pull most of them up here. There's Prague was one of the ones that, you know, people were tracking. Again, it has its rallies, but then it comes back down, right? And right now it's trading at, well, it hit 80 cents. We had Smile, what was that? Smile Direct Club. Okay, this one was another one. I can pull up so many, dude, because I've been tracking a bunch of these for a while. But same thing back here, whole meme movement right here on SDC, and then, you know, they pump it up to 7, and now it's trading at $1. Okay, it's another one. Okay, Mullen, we called this one because we and this is one that I'm tracking on the point of interest, because I do believe that Mullen is going to be going up. Now this one is, I'm taking very lightly with the current setup that I have. Okay, I'm still looking at it. I've been tracking it for a little while. The point of interest here would not be until June 17th. I think Mullen is actually going to go up, like, when it does go up, typically. I mean, you also have to look at the company, guys. Mullen is a pretty decent company, and it is being shorted very heavily here. And you guys can see that straight with this volume. typically with stocks like this that have been shorted to the ground from previous highs, you will come back, you know, and test those mid levels at some point in the future, especially if they're shorted you know, the way they were here with Mullen. So based off of this setup, I would not be looking for an entry until things start to play out in between here. I am looking for end of June. So very similar to GameStop's point of interest, except I think Mullen in this case would obviously gross in a lot more because, you know, based off of these levels, we could potentially see, you know, like $6 if things do start to come up very quickly. Now that would be the first level. The second one would be 16 because that is the point of resistance back here. I think this is a good play. I just think that there's a lot of time to sort of let consolidate here for a little while, but this is one of the other ones that I was tracking. And obviously these are all going to be setting up, guys, for the mother of all squeezes, which is my baby Amy, and yours too, right? I mean, this is the play right here. It's just, you know, I'm talking about specifically what's going to be happening in between this mess. You're going to see all these other stocks go up, and that's exactly why I am bringing up that cycle tracker point of interest for you guys. Oh yeah. Justin, and again, man, I'm not, you know, anything could happen with these stocks. All right, I track things according to their cycles, okay? And I track, you know, I don't just track patterns. I track a bunch of other things when I look at their individual cycles, and it all has to do really with the sector and how they're trading against the other stocks that are closely related to them. So for example, ATER as well, it's another one that we tracked here, and look what happened, dude. The same thing, and this is something that we tracked here as well. Okay, it tracked downside. Okay, we got the spikes basically tracking to a T until right around this range where things started to come back down. So it's the same thing, man. It's using cycle analysis, okay, to understand the price movement of things. I don't believe that news and catalysts have much to do with the price action. I think that there's 1 out of 10 times the catalyst will matter, okay? But 9 out of 10, it won't. And I do believe that because we've experienced this multiple times with GameStop and AMC, where they release very bullish news. I mean, guys, we had really good earnings, and everything that could have possibly been good for AMC, and that was not the catalyst we were looking for. That was one of the ones, that was 9 out of the 10, right, where things don't go in our favor. So there's gonna be that one catalyst that is going to, you know, make the price go up, but it's really hard to track what pattern or what catalyst is going to do that. But I think that, you know, tracking individual cycles kind of give you a little bit more room to work with when making that decision. So again, just be careful with it. You know, not financial advice, but I think with just stocks in general, the catalysts in the news mean very little because it makes it a part of fundamentals, and we know that the stock market right now it doesn't trade based off of fundamentals anymore. It's just a cycle, dude. That is just what I believe, though. It doesn't have to be something that, you know, people necessarily track. There's gonna be noise in between, man, that these media companies get paid out to release certain news. It's out of their control. Like it's according to somebody's agenda, dude. And it's the higher power, big money institutions that are doing this, right? That composite man, fucking Dave. Yeah, I can do that. Hycroft is... So Hycroft, man, is, you know, it will be closely related to GameStop's and AMC cycle. Well, just because AMC, I mean, owns a lot of this company, so naturally is going to go up with AMC. It is trading at lower levels. I think it did have its run. Potentially there will be in the short term, if AMC starts to move up, you will start to see a reversal. I would not see anything crazy here in the short term. Just based off of this setup, we can compare a lot of patterns to with it. This looks, I mean, just by looking at right off the bat, it looks like well, it does look like Mullen a little bit. I guess we can take one of these patterns here to understand what's going on here. I would, oh no, I didn't mean to do that. I would probably see something similar to Mullen's setup happen here, just because, you know, again, it's had its run with AMC too, and if AMC is going to be trading sideways here in the short term, until it has a big rally, I would not see Hycroft move. You know, drastically with it, okay? Yeah, right here. It's actually, it's weird because, yeah, now some of these points of interest are going to be missing. They're not going to look super identical here, but the cool thing about patterns is that they lay that out for you. I don't know if you guys can see this, but right off the bat, you can tell right here, watch. Where are the points of interest? By just taking this bars pattern, watch. Okay, so clearly, here's the run up, right? Come back down, here's the next point of interest. Here's the next one, right there. Shorting pressure. Here's one that is not in this sequence, okay? But you still have 3, okay, that are lining up. And this is, obviously I just took a random pattern here. I'm not even analyzing it or anything, but it just kind of gives you a picture. I just, off of the setup, man, I don't see Hycroft, you know, doing anything crazy in the short term. It's had its run, dude. It's had multiple runs here. Not a position that I would be taking. Same with, so, yeah, I'll compare with, these are the stocks that you guys are mentioning here. So Sundial, these are related, closely related to AMC and GameStop. They're in the same cycle. I call it a cycle sector because they, you know, they ignore everything. Like, we're not trading with, you know, Cinemark and IMAX or anything. Like, they're in their own world, bro. They're doing their own thing. Like, we're not in that sector, right? We're in the meme sector is what it is. But it's a very specific meme sector because, for example, BBIG, you know, ATER, all these other guys, they're in their own sector as meme stocks. Same with these guys. So Sundial is closely related to AMC. I think that whenever you start to see a push on AMC, you're going to start to see a push on Sundial. Typically, it does trade a couple of days after from, yeah, like 1 or 2. You can tell right here, there's a little gap. So it goes up, and then like 2 days later, you start to see Sundial like really kick off. Now, Sundial did go up to its highs before AMC. So the cool thing about tracking, you know, Sundial to here on the larger runs is that it can kind of predict, you know, if there's going to be a bigger move coming. And you can do this with both, right? Because sometimes what you get is the inverse completely. Like, instead of Sundial going up first, you're going to see AMC go up first back here, right? So it's just a matter of tracking, you know, which one goes up first, and then, you know, you can kind of set up for the next one, right? So if AMC starts to go up here in the short term, you might start to see Sundial go up in the next couple of days, right? But I would only do this if it's anticipated that there's going to be a larger rally on AMC, not a small relief rally or anything. Sure, they might track similarly, but for like big gains, I would only be tracking the larger runs, okay, on Sundial. But it is, I mean, look at that, same stock, dude. Seriously, all these other little guys, they're in the same patterns, everything. BlackBerry? Yeah, man, BlackBerry, same deal. Same deal with BB. BB actually tracks GameStop better. That is what I've noticed. If you're gonna track BB, use the GameStop's cycle. Oh god, there's a lot going on here. Okay, I don't know if you guys can tell right off the bat, but these two they relate way better than the other guys. Or not that the other guys. Sundial compares well to AMC's chart, and then we have GameStop's and BB's chart here tracking very similarly to each other. So now with GameStop, I do see a larger rally. You know, we were tracking its cycle recently here, and it's this guy right here. So there's 2 points of interest, okay? And if that is the case here, okay, we have, this is just applying the same cycle that that GameStop has been tracking here for a little while. Yeah, I don't know if you guys can see that, but short, up, okay, short, up, same right here, short, up. And then we have this right here, right? Short, up, which would be around June 17th to June 17th to June 23rd. I'd say around that range, you would start to see the pressure go up. In between, you are going to get small rallies, but it's not going to be anything crazy. Just look at this right here, right? You have in between the price action, you have volatility, but it's nothing crazy. It's just sideways. So even if we go up tomorrow, guys, on this little rally that we are supposed to have, you're still probably going to see the price action come back down for about a month, and then on June 17th we might get another rally here on GameStop, and that should take GameStop, okay, setting up, and this is going to just based off the technicals, guys, that should be a macro reversal trend that should start to bring the price on a bullish trend. And this is where things get, interesting on AMC, on GameStop, on BB, on Sundial, all these guys, because after being shorted, okay, for so long, yeah, I'll bring AMC up as well. Well, I'll just bring it up here. Okay, we know that on AMC also we have this macro trend line here that we cannot cross, right? As an institution that's shorting the price, they are scared of this trend line. Okay, this is right here. This is the time they have to keep the price below, and that would not see. Look at this, September. is that like basically that major time we were talking about here, where things could potentially actually squeeze on in, you know, towards the end of September. But in between that July time, we still have a potential projector rally, or it could just go, you know. Those are the two that we're looking at right now. Same thing with GameStop. Now, if things start to turn here, okay, we start to come back up, this is going to be a bullish reversal. And this is a macro bullish reversal, meaning that after being shorted for years, the price is finally increasing. It's going up. And what does that mean? That means shorts are fucked. All right? Because after waiting for so long, there is very little they're going to be able to do right here. And they fucking know that. So it's a waiting game for that to happen. But it's soon, dude. It is soon for sure. So yeah, I would see potential rally here from maybe, you know, 60, maybe 60-ish. It might come down to 60, and then it'll bounce to like 130, and then it'll start to trade here, and then it'll come back up, set up for September, and then potentially go with AMC on September. They both fucking just go. All right? And what does that do? I mean, look at both setups, dude. If we do something like that, you know, let's say AMC goes like, you know, to $8 or whatever. Oh wait, hold up. I'm like drawing this kind of weird. Say that we go up here, we touch that trend line, we come back down, we set up for like a higher thing here. We do some shit like that. And then oh, fuck, I keep fucking this up. Alright, hold up, bear with me. Say something like that. We set up right here. And then we go like that. Now look at both of these setups. What are they? They are giant double bottom short George W's. Okay? That's what they are. Okay? That would be the next TA setup on both of these, if things were to play out by that POI. I'm going to start calling it maybe like a zone of interest, because I think it's better to have a zone than to have just it's like when it's a point, you're like directing at like one spot, you know? But if it's a zone, you have a good frame, a good time frame, where you can kind of work with it, you know? I don't want to give you guys one date. I want to give you a time frame so that you know that there, you know, there's going to be like about a week where there's likely to be some volatility to the upside, right? See how this chart, look at that chart, bro. And it fucking is a macro projector pattern, bro. This chart, I don't care. Look at it on the weekly or whatever. This is a macro projector pattern. Okay? It has more room to, first of all, we're still in May, so these candles have not closed up. We were using the month chart to do this. Potentially, if May is, you know, it comes back up here, and to possibly like, I'm not going to give any price targets or anything, but if things start to climb up quickly, and let's say we close May at like 18 or something, well, this is the macro projector line right here. Okay? And you guys know how projectors work. They set up. Okay? And then they go. Okay? You guys know that. This is a monthly chart, remember that. So September is right here, and then July is right here. Okay, so if we were looking at this from a projector's, you know, perspective, it would be super ideal for this thing to run around that time. This would make sense. I mean, we've seen, I can pull up, guys. Look, I'll pull up the projector pattern that happened in June. just compare it. Now, you guys have to remember one thing, okay? Projector patterns aren't always going to have the same shape, okay? They're not always going to look like this, like a mountain, okay? Some are going to look like this, but inverse. They're going to look like this, okay? There's different forms of projectors. Some will just have like a curve, too, like that. Actually, projector patterns, all they are, they're fucking mountains, bro. They're just fucking mountains, okay? Alright, you're making your little mountains right here. Some look like that, others look like this, like triple bottom. Like, dude, that's all they are. It's just basically a pattern that is coming back down. All it is that it's a pattern coming back down to meet a support trend line that has hit basically a low point, okay? So that's what they all have in common. All the projectors have in common is that they all come back down to meet low levels. And that's basically where it starts, okay? So for example, right here, okay? We hit a low point from a previous high, and this is the first trend line right there. What do? There's our support trend line. Comes back down to test it, and then it goes. Same thing back here. Okay, you hit a low point from a previous resistance, and then you set up your line, and there you go. Okay, this one, you can actually do it like right there, like that. Actually, this might have been a better example, because this one does go back down, and then it comes back in, and it goes. Okay? Here are two little projectors for the November run. Same thing. Okay? And then the infamous fucking projector. The one that we failed. Okay? The one that we fucking failed. Right here. And that sucked, man. This sucked ass, okay? I like, it still fucking sucks. It still hurts. But this is an example of a projector pattern that failed. What's another example? Right here. I'll bring these up all the time for you guys. You know. Again, you got your little mountain, and it comes back down. So that is what we're waiting for, okay? We're waiting for that to get confirmation of the next setup. And we're still going to keep this in mind, right? We're still going to talk about how, hey, there is still a possibility that if things do not line up and we still fail the next projector pattern, that things get prolonged, okay? I always talk about that because the markets are not always going to be certain, but it's one thing is for sure, eventually, okay, we are going to get our fun, because we know, man, how much they have, suppressed the price action here and how long it's been. So, when it does pop, dude, it's gonna be worth it. Let's see, I'll read some comments real quick. Hey, who is spreading FUD on the mods? I don't know. Wait, is somebody spreading FUD? Sorry, guys, I was not reading the chat. The chat. You guys are all dope. I mean that you guys are all awesome. Okay, the chat here is, I mean, I've never seen a chat like this. I mean, the amount of respect I have for you guys is I really do, man. So I hope that nobody is, you know, spreading FUD or anything. And if you are, no FUD, all right? No FUD. But I would like to think that, you know, everybody here is on the same page. You know. Thanks, Sean, man. I appreciate you, dude. I try, man. I really, you know, again, I know things are not looking, you know, the best, but I am fully optimistic, and I do believe that we are going to get our turn for sure. So yeah, I appreciate that. Thanks, dude. Thank you. Suck my mask. Thank you. Thank you. Alan. No fighting, bro. Thank you, CFAS. Appreciate you, man. You want me to cry, bro? You want me to cry right now? Oh, you have, you know what? Tears of joy. How about that? Tears of joy. I'm crying tears of joy right now for you, baby. Okay, guys, so that's what we got for this setup. I hope I cleared some things up. I know that there was a lot of uncertainty in the markets today and just in general the past couple weeks, but what we are tracking is going to be that potential, you know, dip real quick to that 950, 930 level tomorrow, and then that could potentially kick things off. Typically, once we get our low point, it will be followed by a stronger rally. Again, I'm saying rally because anything that where we get price action going up, I consider a rally, because that's what we do in here, man. We party it up, and that is just what it is. Okay, I'm not saying it's gonna squeeze. I'm saying it's a rally. So you see it right here. You got a V setup, V setup, V setup. This is more of a macro V setup, but you got your low point. After something so drastic, it's almost inevitable, guys, that we don't get, you know, or that we do get this relief rally here. Okay, so we'll be tracking that tomorrow. But yeah, with that being said, I will cut the stream. All right, and I hope you guys enjoyed it. I hope, you know, everything is good. If you have any concerns or anything, just throw it in the comments, man, or join the Discord. Talk in there with some peeps. There's some good guys in there that are always, you know, telling it how it is, and good guys that really care, and I think you guys would feel good in there for sure. All right, so we'll see you tomorrow. Have a good night, and I love you, bro. Bye-bye.